Hello, and thank you for your interest in Divergence Cloud. In this video, we're going to cover what is Divergence Cloud, how does it work, its parameters, both logic and styling, and a few practical trading examples to show you how the indicator can be used. Divergence Cloud is a trend and volatility-based indicator and trading system designed to detect and profit off of reversals and continuations. It's available for TradingView, Thinkorswim, NinjaTrader, MotiveWave, TradeStation, and more. It analyzes price trend, momentum, and volatility to predict the most likely future price action, and then depicts its predictions on the chart in the form of glowing clouds, colors, and entry-exit signals. The indicator draws glowing areas called divergence clouds around price action to indicate the expected movement. Bullish divergence clouds develop around areas where volatility is stabilizing and decreasing, while price trend and momentum are accelerating upwards. These moments tend to coincide with strong bullish support before an upward reversal, or short pauses and pullbacks which act as good entry points before bullish trend continuation. Bearish divergence clouds develop in zones where volatility is high and increasing, while price trend and momentum are accelerating downwards. These clouds are designed to highlight unsustainable tops before drops, and areas of failing strength and support leading into downtrends. The parameters. Divergence clouds parameters are split into two categories: the logic parameters and the styling parameters. Logic parameters. Because its calculations are based on relative trend, momentum, and volatility, the logic can be adjusted to suit any market or time frame. The ATR period parameter controls the period of the ATR used in relative volatility calculations. A larger period will make the indicator look further back when judging the momentum of current volatility, while a shorter period will keep it focused on more recent price action. The divergence lookback defines the lookback for areas signaling trend reversal and continuation. These are the divergence clouds themselves. It's best to fit this lookback to the chart and time frame you're trading, as it's crucial in determining inflection points in the trend. For example, while it might make sense to look back 60 bars for divergences on the 1-minute chart, a long look back like this is probably going to be much too large for the daily chart, where reversals and continuations generally take less than 60 bars to happen or recognize. The minimum price move in ATR percent defines the minimum absolute change in price over the divergence lookback required for a cloud to develop. This helps to filter out noise and flat action where there isn't really a decisive or actionable trend. The long and short partial exits define the maximum number of scaled exits you want the indicator to take for each entry. While they have no effect on the clouds or entry signals, they can be used to your advantage for better position sizing and profit taking depending on the long-term bias of the chart. For example, if you're trading NASDAQ futures, which are historically in a bullish trend, it might be wise to increase your long partial exits and thus scale out your profits more slowly on the long side, and decrease your short partial exits so that you're taking your short profits quickly and moving on before a bullish reversal. This way, you're not getting caught against the trend when things return to normal, and you're letting your profits ride when you catch the trend in its usual direction. To recap, you generally want to have an ATR period long enough to get a grasp of recent volatility, a divergence lookback large enough to get an idea of the recent trend, and a minimum move in ATR percent big enough to ignore flat price action and weak signals. Styling parameters. Divergence Cloud comes with styling parameters for every part of the indicator, from the entry-exit lines to the entry-exit markers, and the colors and properties of the clouds themselves. Next, we're going to look at a few practical trading examples to see how the logic can be tailored to different charts and timeframes for profitable signals. We'll apply Divergence Cloud with its default settings onto the 1-hour chart for the NASDAQ 100. These glowing areas are the divergence clouds. Green clouds representing areas that predict bullish action going forward, and red clouds representing bearish ones. These chains of clouds are also accompanied by entry and exit arrows, which illustrate how the trading system suggests you trade them. Let's show the entry-exit lines to get a clearer idea of how these signals are performing. We can now see that there's a line connecting every entry signal to its scaled partial exits. The defaults already seem to be performing pretty well on this symbol, but let's take a look in replay mode, analyze things visually, and see how we can adjust the settings for even better results from our chart. Playing back in replay mode, we see much of these large, sweeping profitable trades, followed by quick, mostly flat entries and exits that close out a few bars after opening. The key thing to notice about these failed entries is that they're occurring in flat areas and are mostly due to noise without major trend moves. Let's see if we can filter out some of these weak signals by increasing the minimum move in ATR percent. We can see now that we've actually gotten rid of the majority of these flat signals, and the trades we're catching are part of bigger confirmed moves. Let's continue playing forward. Another frequent source of failure visible on this chart are these short positions which are getting closed out with a partial loss right when trend reverses upwards. We should notice that this chart, the US 100, is currently in a bullish trend in the long term. To reflect this inherent bullish bias and use it to our advantage, let's bring the short partial exits down to 2 instead of 4 so that we don't get caught short when these upward reversals happen. Now we're catching most moves to the upside and downside, but we're biasing ourselves towards the sentiment of the chart. The short trades that were once causing us most of our losses are now being closed out profitably and quickly before the trend reverses. Next, let's take a look at MU on the 15-minute chart and apply Divergence Cloud with the default settings. While there are some good trades, right off the bat we can see that there are repeated short entries and exits that seem to be fighting the overarching trend and closing out after just a few bars. We can also see that these failed short entries seem to be occurring when there's not that much bearish action to trigger them. This is because Divergence Cloud isn't looking far back enough to do its calculations for the clouds. We need to increase the divergence lookback so that the indicator can get a better sense of the trend. Let's try setting the divergence lookback to 3 times the ATR period. These signals are much better. The exits are occurring at key points in the trend, and our entries aren't fighting against the price action. However, we're still getting some of these flat entries and exits. So let's increase the minimum move in ATR percent to see if we can filter them out. Taking a look at the daily chart for this symbol, we can also see that, despite a recent sell-off, we are generally in an uptrend. So, like with the US 100 chart, let's decrease short partial exits to 2 and increase long partial exits to 6 to match the bias of the chart. Now let's take a look in replay to see how it performs. As we can see, we're getting pretty stellar performance, maximizing our gains by taking safe scalps on the short side and letting our profits run on the long side. In practice, with such an upward bias symbol, we could also ignore the short signals altogether during live trading. As with any indicator, the best setup will be achieved by backtesting and optimization. However, we hope this has given you a good glance at how easy it is to set up Divergence Cloud for profitable trades on any chart. Thank you so much for watching and for being a part of our community of traders.